Maximus is up almost 13%, 12.92% on its earnings. I'll say it's a good report on earnings. Let's get the graphic up there. There's our earnings, and it was solid, but it's hard to really understand why it was up quite this much. Look, I own the shares in our model portfolios. I think it's great. I do think over time it's worth more. It's just based on this one piece of new information, a 13% bounce is hard to really completely understand why the market would react this strongly to it. I'll take it, and I'm not using it as a sell signal or anything like that, but you know, the earnings itself was not so great that you would expect this in the market. So revenue was up 22%. Awesome, we love that. However, well anticipated. In fact, it missed estimates by 3.3. Earnings per share was up 6.6%, which is actually quite underwhelming when you know revenue is up 22%. You know, they should be in line. So it meant costs actually went up a little. They are building the business, and so maybe some costs can build up that way, and that can happen. So let's not get overreacting on it, but it's also up 13%. So we're trying to, you know, figure out why exactly we'd go that crazy, or the market would go that crazy. It was a nice beat though, 4%. I like that number of a beat, right around the 4 or 5%. I don't want it to be too high or too low. I just like a nice, you know, Goldilocks beat, which I'd call that on the bottom line a Goldilocks beat. Again, though, it doesn't warrant 13% pop in the stock, in my opinion. Now, the stock itself, the company itself, is a good company, and it should be worth more, in our opinion. We've thought that ever since we started tracking it. Let's take a look, and it jumps off the page right away. Good return on capital. Good valuation. Barely have to do anything to understand it. It just, you know, makes sense. The company itself, I should explain a little bit, although I've done it in other videos. It's a government, they build government information systems and implement programs for the government. A lot of healthcare stuff. So the Affordable Care Act, for instance, if you need to make a claim, you would go on to, well, the government website, but it's built by Maximus, and file your claim on there, and it does all the processing and payment or whatever needs to be done, soup to nuts. They're also, by the way, not just in the U.S., UK, Canada, Saudi Arabia, Australia. So, you know, it's a good sized company. It's a $5 billion market cap. Pretty solid balance sheet as well. Not that much debt. Only 122 million on a $5 billion market cap. That's virtually nothing. And solid working capital. So we can't really ask for the company to operate much more efficiently than this. Stock just kind of slowly and surely moves up. You know, that's definitely what we're looking for. So really liking the metrics from Maximus. Trying to understand why it would pop quite that much on this earnings, but we'll take it, and we're not using that as a sell signal. So looks good. Thank you for watching our investment video. This is the same analysis we provide to our institutional clients. Want to improve your portfolio? Simply subscribe to our YouTube channel below, or better yet, go to our video website at video.fsavaluation.com and get access to the entire library.